All right, let's dive right into this explainer. Today, we're unpacking the absolutely phenomenal growth trajectory of Miami International Holdings, or as you probably know them, MIAX. If you follow financial exchanges, you know it's a space traditionally dominated by just a handful of legacy giants. But MIAX, well, they've been quietly, and now honestly, very loudly challenging that entire status quo. We're going to look at their recent data straight from their SEC filings and their latest Q1 2026 earnings report to figure out exactly how they are snatching up market share and scaling this business.
To make sense of their massive multi-asset business, we've broken things down into 5 key areas. Meet MIAX, the 2025 financial surge, dominating options, expanding the footprint, and finally, Q1 2026 momentum. Let's get to it.
Section 1. Meet MIAX, a technology-first exchange.
So at their core, MIAX is a tech-driven powerhouse that builds and operates regulated financial marketplaces. And they don't just play in one sandbox. They operate across multiple asset classes and geographies. We're talking options through exchanges like MIAX Pearl and MIAX Emerald, U.S. cash equities, futures, and even international listings in places like Bermuda and the Channel Islands. But here is the real secret sauce. The engine running all of this is powered entirely by proprietary in-house technology built specifically to handle the extreme, unique demands of equities and derivatives trading. It's like having a custom-built race car in a field of standard sedans.
They actually state this directly in their SEC annual report, saying that technology-first, customer-centric foundation continues to drive our core strategy. And you know, that isn't just corporate jargon. That is a structural advantage. It allows them to offer award-winning customer service and really robust risk protections. Because they own their tech stack from top to bottom, they can pivot and adapt way faster than competitors who are bogged down by clunky legacy systems.
And the market absolutely loved this strategy following their IPO in August of 2025 at $23 a share. Just consider their cumulative total return numbers through the end of 2025. While the S&P 500 and their peer group were basically just hovering around baseline growth or even dipping a bit, MIAX's stock completely took off, finishing the year at over $44 a share. That is a cumulative return that vastly outperformed the broader market and their direct competitors in a really short window of time.
Section 2. The 2025 financial surge, a breakout year. Looking under the hood at the fundamental numbers driving that surge, 2025 was truly a breakout year. The growth metrics are just staggering. First off, they hit an incredible 56% year-over-year growth in total net revenue. Think about that for a second. In a mature, established industry like financial exchanges, a 56% jump in just 12 months is incredibly rare. It signals a massive shift in how the market is behaving and migrating toward their platforms.
And that massive percentage? It translates to some serious capital. Specifically, it means they generated an eye-watering $431 million in net revenue, which is total revenues minus the cost of revenues, for the full year of 2025. They essentially positioned themselves perfectly to capitalize on elevated market volatility throughout the year.
But here is the absolute most important takeaway from this section. It is not just about bringing in more money, it's about how efficiently they process it. Their full-year adjusted EBITDA margin reached a phenomenal 46%. That's a massive 16 percentage point improvement over 2024. When your margins expand that dramatically as your revenue scales up, it proves one thing for sure. Your underlying proprietary technology has incredible operational leverage.
Section 3. Dominating the options market, the core engine.
So what exactly was the fuel for this financial surge? Well, while they're definitely expanding everywhere, multi-listed options remain the undisputed heavyweight champion of MIAX's business. And they didn't just grow organically here, they flat out stole market share. By the fourth quarter of 2025, their multi-listed options market share grew to a record 18.2%, up from 15.9% in the exact same period the year before. They are actively taking big slices of the pie right off the plates of legacy exchanges.
In absolute terms, that market share translates to an average daily volume, or ADV, of 11.1 million contracts in 2025. To put that into perspective, that is roughly a 46% year-over-year increase in volume, while the overall industry ADV only grew by 28%. So MIAX is outgrowing the broader industry by a massive margin, which just proves that traders and member firms are actively packing up and moving to their technology-first platforms.
Section 4. Expanding the footprint, beyond options.
Now, there's a massive scale difference between their segments right now, which actually gives us a great look at their future growth runway. While they're processing roughly 10.8 to 11.1 million contracts a day in options, their equities segment is handling about 177 million shares a day, and futures sits around 10.8 thousand contracts. Options is a mature powerhouse, absolutely, but equities, futures, and their international listings, those are the emerging, hungry challengers within their own ecosystem.
When we break down the actual 2025 segment data, we can see exactly how this diversification plays out in the financials. Options generated an absolutely massive $375.3 million in net revenue. But look at the seeds they're planting for the future. Futures brought in over $20 million, cash equities nearly $19 million, and international almost $15 million. Sure, they might look small compared to options right now, but these segments represent entirely new, untapped revenue streams that MIAX can optimize using the exact same proprietary tech stack they used to disrupt the options market in the first place.
Section 5. Q1 2026. Continuing momentum into the new year.
Now, the big question for anyone following this company post-IPO was whether 2025 was just some sort of volatility-driven anomaly. But wow, the data shows a continued aggressive acceleration. In the first 3 months of 2026 alone, MIAX hit a record quarterly net revenue of $128.6 million. That's a 40% jump year over year, and it gets better. Their adjusted EBITDA surged 66% to $66.1 million. And remember that massive 46% margin from 2025 we talked about? Well, in Q1 2026, their adjusted EBITDA margin expanded even further to 51%. They are literally getting more profitable the larger they get. It's wild.
Across the board, their key performance indicators are just flashing bright green for Q1. Options market share held incredibly strong at 17.3%, up from 16% a year prior. Over in their emerging equities market, their equity capture per 100 shares actually turned positive, hitting half a cent compared to negative 2 cents the year before. And their international listings, they absolutely exploded, growing 404% to over 6,000 listed securities. The momentum is just so visible across every single business line.
And that brings us to a really compelling final thought for this explainer. MIAX has absolutely proven they can build better tech, go public, and wildly outpace industry growth in the options sector. But as they aggressively scale their newer asset classes like equities, futures, and international markets, can this challenger maintain its relentless capture of market share against legacy giants who have incredibly deep pockets? Well, if their 51% margins and 400% international growth in early 2026 are any indication, the legacy exchanges should be paying very, very close attention. Thanks for joining me to unpack the data today and keep exploring these incredible shifts in market infrastructure.